Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny.
And banks had some major news this week. They all passed a stress test, and some of these banks are looking a lot more attractive than others to a possible buy, and also some risky plays have opened themselves up. So we're gonna take a look.
Two stupid guys trade stocks.
Boom. All right. So what happened? Are you familiar with any of this?
Yeah, I mean, I understand that the Federal Reserve conducts stress tests on a couple different scenarios to see if
Yeah.
the kind of banks are up to these economic changes that they
Right.
anticipate could
They're
happen.
basically trying to make sure 2008 never happens again. That's the goal, right? Happens once a year. We're going to look at which banks were in it and how they performed. Some of these do have a pretty attractive buy, but this was just a headline, right? J.P. Morgan, Goldman, Citi, MS boosted dividends after the stress test went out. Obviously, they were very happy with the results. Motley Fool actually predicted it like 4 hours before it happened, which is, I mean, that's kind of cool. So they basically put up the biggest winners. The three of them was J.P. Morgan, and they said we think they're going to increase their dividend really soon. And then like 4 hours later, that happened. Um,
Sexy.
Bank of America, possibly best showing in its peer group, and Morgan Stanley, same thing. So pretty interesting. Now, here's the deal. So, what is the stress test? All right, stress test. 23 largest banks in the U.S. passed the Fed's annual stress test, and while none were expected to fail, the fact that there was no negative surprises is a general positive for the banking sector and financials. Now,
Okay.
usually, yearly, we don't really care about this. We just kind of assume it's going to be fine. It's not really news. I guess, some people care. Um,
Mhm.
but we've had banks shut down. Everyone's freaking out. No one knows. There are regional banks that were in this test, by the way. But
Interesting.
yeah, there's six of them. Everyone's freaking out, and they're like, I don't know if I should, buy regional banks or banks in general, even though some banks are at a very attractive price. Do you know what the stress test is? Like what they do?
So I understand that basically it's financial modeling. They use a couple
Yeah.
different scenarios that are designed to like show if they could sustain the stress of like breakdowns in certain asset classes. Now, I'm not sure if they're how transparent they are or how nitty-gritty details you get in terms of what the actual metrics are for this. Like, whereas it's a mild recession versus like, a full-on depression. Like I
So
don't know.
they have it in the middle paragraph here. This is from the Federal Reserve site after it had completed the stress test. So this year's stress test includes a severe global recession with a 40% decline in commercial real estate prices, a substantial increase in office vacancies, and a 38% decline in house prices. The unemployment rate rises by 6.4 percentage points to a peak of 10%, and economic output declines commensurately,
Wow.
right?
That's very like dark and gloomy
I
to
agree.
know the extent of
Yeah, I'm
that.
surprised.
That's sexy. Yeah. 40%
I,
kind of commercial real estate. We've talked a little bit about that and how
hmm
there's probably going to be a significant write down, but 40% is a large
It's
chunky
a lot.
number.
It's a lot. And
Yeah.
I read that. I was like, man, they all passed? Oh, crap.
Wow.
All right, great. It's kind of surprising. Here's the banks. I'll show you what the categories mean after this slide. But kind of like category threes, a lot of those, not all of them, but a lot of those are regional banks.
Okay.
Not all of them. Category ones, that's your Bank of America, that's your Morgan Stanley, your JPM, that kind of stuff.
Yeah.
Here's the actual definitions. So your category one is U.S. global systemically important bank holding companies. Your
Jesus. Yeah.
category threes, domestic and foreign bank holding companies with 250 billion or more in total assets. You're going to have a couple regionals that fit that. So, basically. Now, it's not like massive news, okay? But here is four banks and how they reacted. You can see that they all had a gap up. They all had a hefty gap up. Now, Bank of America and Goldman Sachs went back down to where they had opened the previous day, or closed the previous day. JPM went up, and PACW went down a little bit actually. Now you can think that this is selling or whatever. I zoomed in on PACW just because this is still an insane stock. So this is just 6 days right here. but it's 7 to 8.50.
Yeah.
This is a bank, dude. Like this is
There's a
wild.
lot of moving for a bank. Well,
Yeah.
were they on the previous list? Because I couldn't
No,
see them. But
I don't
okay,
think I
I
don't think
assume they
so.
were small enough that they wouldn't be. But I just want to double check that for
I'm pretty
if
sure
they
they
didn't
were
know.
not.
Yeah,
PNC
I didn't
was.
see. All right, fair
No,
enough.
they are not.
Oh, perfect.
Okay. So here's Bank of America. Here's the one that looks extremely attractive to me. Okay. So you can see we have this big decline in March, right? We're hanging out, we're having a great time. Boom. We have those like three banks that close or start to close or have bad news. We're still hanging out quite low at $28. Okay.
Wow.
Now, remember, these both passed the stress test, and Bank of America, according to Motley Fool, is like this is actually the best of the group. This is
Yeah.
JPM. So they had their same thing too, like a little bit of a decrease, and then they just came right back up, and they're actually almost as high as they were since February.
Hmm,
So
interesting.
yeah,
Yeah, Bank of America has a reputation for being kind of risk adverse. Historically,
yeah,
I can't say because they're not a
I
big
agree.
New York bank, right?
Yeah, no, they're not.
That's
They're
what.
not Wells Fargo. They're not gonna lie on accounts and try to get more money. No, agreed. For sure.
Fair enough.
I hate this graph. I don't like it because they did a split, so it looks super weird.
Okay.
But I am in DPST. Now, I kind of want to buy more Bank of America shares now. I'm kind of weighing that option. But DPST is the Direxion 3X regional, right?
Yeah.
They're chilling at, so it was $5, but they did a split. So $54. I had told people I was previously in this. I have increased my position. Okay, I was at
Okay.
100 shares. Now I'm at 170 shares.
Wow. Hey, you're up 7%.
Yeah, I mean, this goes up and down like crazy.
Yeah,
Like
I'm,
it's
I'm sure
just
it does. 3x levered. Of course it does.
yeah, yeah, it's wild. So my average cost it was at $47. It was $4.70, but now it's 47. I have increased it to 50.29. I'm just gonna hold on for a little bit. I'm not gonna increase it from here though. It's logically I think it should be fine, but this could also just die and then I just lose 9 grand. So
Yeah, yeah, yeah. I would say for risky plays like a 3x levered ETF, 8% of your total portfolio, as indicated on there, is probably a little bit aggressive for many people.
yeah, I'm an aggressive guy.
That's what she said.
All right,
All right.
guys, have a good one.